let's jump on into it. So what we're going to be talking about is tax minimization, but the fundamentals, because we could spend days and days and days talking about things, and you really don't need to know the ins and outs. And I'll tell you why, because Thriday has you covered. All right, let's get started. What I want to talk to you about is really what is the importance of actually managing your taxes effectively? What are some of the common issues and questions that we get, and how technology actually simplifies tax management? So let's start with the importance of managing tax effectively. And again, I want you to know that if it feels really overwhelming, a lot of what Thriday does takes that away and does it for you. So why is it important? We all know taxes are important, but why is it important to you as the business owner? The first is it actually helps you maximize savings. So effective tax management helps you to legally minimize your tax liability. And that means that you can apply deductions, allowances, and things that allow you to retain your income so that you have more money in your pocket and that you can invest or spend as you see fit. The other reason that it's so important to manage your taxes is that it means that you avoid penalties. No one wants to pay the ATO any more money than what is necessary. The other reason is it actually allows you to financial plan. And what does that actually mean? Because a lot of the time, I know the people that I speak to really feel like tax is this separate, unknown, scary thing that sits to the side of business. But when you know your tax position, which Thriday does in an instant, it allows you to make future decisions. So whether you can invest in something, if you could borrow it at any stage, if that's something that's necessary, what you could pay yourself. The other thing is it actually supports your business growth. By knowing your tax position, you can be really clear about what cash is yours. And as you know, we have an inbuilt profit first allocations and bank accounts, which we'll talk more about. So it helps you with your cash flow. And most people tend to think that taxes and cash flow don't go together, but they can, especially when you have the right tools at your disposal. And the last and probably most important thing when it comes to managing your taxes effectively is your own peace of mind. I know that tax can be super stressful, especially when you're not sure what you need to have, whether there's this looming 30th of June deadline and you're like, oh, we don't want you to feel that way. And there's actually no need for it. If you are prepared and if you're using the right tools and you have the knowledge, because knowledge is power, then you can have peace of mind when it comes to taxes and you can focus on your personal and professional goals.
Yeah,
So
bill
let's
shock.
jump.
No one wants the bill shock.
Oh, not at all. And I bet you hear that a lot, Justin, in terms of the bill shock when you talk to people.
Well, bill shock, and I've got tax returns dating back 3 years. What do I do?
Yeah. Well, we can answer both of those questions. And we'll get to that when we talk about the different areas of that and when you know your actual tax position. So love that. Bill shock and what do I do? I'm so far behind. And that is one of the common tax issues, that you've ignored it for so long, or it's felt so overwhelming, or you haven't had the right support that you just leave it. Well, good news is that you can get up to date really, really quickly and we can get them lodged and it can no longer be a problem for you. The other thing that comes to the common tax issues that I find is deductible expenses. So if I say deductible expenses, Justin, what do you think?
I think, like, what expenses can I deduct? How much is that expense? Like, how much is the deduction on that expense actually going to save me on my tax? Or, once it's deducted, like, how do I keep an audit trail of that? Because another fear is being audited by the tax office, right? And I actually get asked the question quite a bit. So because my transactions are in Thriday, does that mean I still need to save receipts? And absolutely, it still means you need to save receipts, because that's the proof of what you purchased, where you purchased it, not just the proof that you've spent the money, right? So deduction's important.
Yeah. And another word for it is, especially when we're talking about business, is expenses. And I know that when I talk to our customers, they're like, well, is the deduction different to an expense? And there are some expenses that are not deductible, like if you're paying for any fines or penalties, you can't actually deduct that from your income. But knowing what you can actually claim is really important. And we actually have a checklist coming out that might help with that.
Well, and sorry, Laura, just jump in. And Thriday has a lot of that built in, right? So we as you spend money from Thriday and as you save those receipts, we'll show you how to do that in a minute. If you're not already aware, but we have the built-in chart of accounts, built-in categories, etc. And we also enrich the merchant detail of where you purchase that item from. So say you go to Bunnings, you take a snap of the receipt, we automatically OCR or scan that data into Thriday. We can see whether that merchant's registered for GST or not and apply that GST. All of the stuff that you would have to think about outside of Thriday if you're doing it on your own has kind of been thought about it for you. So it's literally a matter of just spending your money from your Thriday expense account or with your Thriday Visa debit card and then saving those receipts to Thriday, right? And then we'll get into the nitty gritty of it.
Yeah, we'll definitely get into that in a minute. But a lot of these issues that I'm talking about are already solved. So the other thing is uncertainty of reporting income. There may be business income. And if you're using, as Justin said, the bank accounts within Thriday, then you have nothing to even think about because it will do it for you. But let's say you get other income, then we also have a way that you can get that income into Thriday so that you know what your tax estimate is. But it's often that uncertainty around, well, what can I claim? What income is, necessary to my tax return, but isn't necessarily a business income. And so we'll go into how we'll do that in a minute. The other is managing assets and liabilities. And I know when I say assets and liabilities, people go, oh my gosh, what is that? Lots of accountant talk. We will break that down for you. And then, of course, the record keeping and documentation. That seems to be a big worry for people, and Thriday makes that super easy, and we'll show you how in a minute. And then understanding the tax laws and regulations. Guess what? You don't need to do that because Thriday has all of this programmed into it. There are accounting standards and there are regulations and they are rules. And I know, Justin, you like to say something about this, so I'll let you jump in.
Yeah, absolutely. Rules can be programmed, right? And that's what Thriday has basically done. And it's how you account, like how traditional accountants practice management software works, right? It's just that they make you do the work to then feed them the data that then they can apply the rules to. So we've done the same thing, but it just comes out of the box with the rules already built in. So you don't have to think about the rules. It's as simple as income in, expenses out, saving your receipts, and then it's all programmed and done for you.
Doesn't that sound like heaven? It does to me. And then the last thing is the deductions and tax credits and that sort of stuff. If you have everything in the right place, this will happen automatically for you. So these common issues are no longer issues. And really, technology and Thriday is what will simplify your tax management. Now, before we get into the nitty gritty, I just want to spend one moment to say hi because I'm new to Thriday. I'm very excited to be here. I'm the head of accounting and tax and very excited to be on the journey to make small businesses' lives easy by eliminating financial admin. I've been in the finance industry for more than 15 years. I won't tell you the exact number of years because it's scary. And my mission is to help the small business owners understand their financial health, optimize profit, and develop effective financial systems. So really happy to be here. I'm going to start now with the income side. And again, we will show you in Thriday what this looks like. And what I might do is I might stop sharing my screen so that, Justin, you can share Thriday whilst I talk through some different elements.
Sure.
And the first being that we often have business income, but then we might have salary outside of our work. We might have rental income or investments and other income streams. And this forms part of the income that you need to show on your tax return. And there's also a difference between taxable and non-taxable income. Before I jump into that, I'd love for Justin to talk you through how easy it is to get income in to Thriday.
Yeah, so as Laura said, there's multiple ways to bring income into Thriday, and it's important that all income is accounted for within Thriday to make your tax calculation as accurate as it possibly can be, right? To give you that peace of mind and that control. So obviously we've got the bank account. So as money comes in and money goes out, those transactions all count towards your income and your expenses. So that data exists. The other way we can do it is if you go to the tax section and go into manage balances, any income, say you spent cash or you spent some money out of your personal bank account on a business expense because you didn't have your Thriday card or whatever at the time, you can then add manual balances, right? It's really important you keep these manual balances up to date with income and expenses that sit outside of Thriday, so your tax is up to date. The other thing, when you first join Thriday, or if you've got a side hustle, in your tax profile, you can actually set how much money you're going to earn outside of Thriday. So say you earn 50 grand in a job, you would put that amount in here and you would save that. And then, especially with Thriday being for sole traders at the moment, that money obviously all counts towards your tax, and you only do one tax return for your sole trader revenue and your salary revenue. So that's all included in here. And what it does is it brings you above or below the tax-free threshold in Thriday, and then puts you into whatever tax bracket you're meant to be in. So we can display your tax to you correctly to give you the control that you need.
Well, we've got a question there from Mohammed about how income that is from a joint investment, so income from a rental property in two names, how would you put that in?
Great question. So we do have the concept as well of business use percentage, but in this case, that's all for business use. So if it was in joint names, I might lean on you a little bit, Laura, but my understanding would be your portion of the income would come into your Thriday account and be recorded against your sort of tax profile, and you would pay tax on your portion of that revenue, and then your partner would have to do the same elsewhere.
Correct. And if it's not coming into the Thriday account, you can actually put that income in the manage balances section once you know what it is to get that up-to-date tax estimate.
Exactly. So tax, manage balances, we could add a balance for income. We could say it's for rent received, and we could say it's $500. And then for the chart of account, we could go other business income, right? Because it's an investment. Would that be correct, Laura?
Yeah. For this, it would go to other business income. And when, if I was to look at this, I would be like, what is this? Can see it's rent received, and it's easy to then allocate in your tax return.
And then if you wanted to save a file to this related to that transaction, you could. And then we go save. And then in real time, your tax position would have been updated and changed according to the income that you just received.
Absolutely. So that was a really great question. And a lot of online tools don't allow for this. So this is really great that if you have other income, that it does go into your Thriday account. I do just want to talk quickly about taxable versus non-taxable income, because there's, other things that you may receive but don't need to go in your tax return. And I know that people get a bit worried about whether they're doing the right thing or not. So taxable income is really anything that is wages, interest from savings, rental income, business income. But when it comes to things like gifts or inheritance that you might receive, or let's say you've got an insurance payout, or you have a hobby on the side that's not actually a business and you receive a small amount of income, none of that is actually taxable. So it doesn't have to go into your Thriday account or be on your tax return. The other thing that a lot of businesses tend to look for are grants. And generally, grants are taxable, except where indicated. So make sure if you're applying for a grant and you're successful in getting that grant, that you read whether it's something that needs to go in your tax return. So things like the COVID business support payments, that's not taxable. So it doesn't need to go into your tax return. Any natural disaster grants or, particular improvement grants that are out there, they may not need to go into your tax return. So it's important to have a look at that, because I know that the customers that I work with, a lot of them are in search of grants, and some need to go in your tax return and some do not. So therefore that will depend whether or not that goes into your Thriday account.
Yeah. And what I'm showing you here, sorry, Laura, just while you're on that, is the chart of accounts. So you can actually, we'll assign the category in the chart of accounts out of a box for a transaction, but you can actually manipulate this if you want to and edit it. So in the example that Anne just said, should I record self-employed program income into Thriday? Yes, you absolutely should if you wanted to include it against your tax. But if that was salary income, or if you'd already paid tax on that in some way, shape or form, you would have it as other business income tax exempt, right? To make sure that you're not doubling up on that tax payable, right? And that your records are accurate.
Absolutely. And really from a running the business perspective, because whilst tax is really important, you need to be empowered to run your business. It is, and this will answer Ahmed's question around, can you put non-taxable income into Thriday, which I know you've just answered, Justin, with the tax exempt part. The answer is yes, you can. And it is important from a business perspective to just like a reporting perspective from a cash flow ins and outs. So the more information you put in terms of what's coming in to you as income and what's going out as expenses is really important.
Exactly. And you'll see that here in the cash flow module. And you'll also see it referenced in your income and expenses. And the cash flow module is really great just to get a reference. How's my business performing month over month? Red is obviously expenses and green is obviously income. And if those lines are sort of moving up a little bit, or at least they're at a position where the red is lower than the green, you're on the right track.
Absolutely. And so when it comes to doing your tax and, you can put this information into Thriday, as we've spoken about, there are relevant documents that should go with anything that you're putting in. So with the employment income, we've got that section in the tax profile, so that looks after that. But things like investment statements, rental income records, potential other income that you receive, there'll be some sort of documentation. So as Justin showed you, where it says to upload, I highly recommend you put it in there, because it means that if you're getting help from, Thriday accounting or even an external accountant, then all of the information is easily accessible, and it makes it way more relaxing for you when it comes to accurate tax reporting and knowing where you stand and not having to run all over the place and get out your cardboard box with all of your receipts.
Yeah, imagine this. The tax man comes knocking on the door and says, I want to do an audit on your business. And you go, absolutely not a problem, because all of your receipts have been saved. All of those statements have been saved. All of your transactions exist in one place. You have the full audit trail. You have all of your tax and everything up to date. It's absolutely nothing to worry about because it's all there.
Absolutely. And so let's switch to expenses now. So we've spoken about the income, and the income piece is super important. Expenses are just as important. And so as Justin said, with the Thriday bank accounts, if you're spending out of there, it will automatically be captured and allocated to the correct expense for you. And feel free to jump in and show that if you'd like to, Justin.
Exactly. So when you sign up to Thriday, the first account you get has the Visa debit card attached to it. And if you're using that to make all of your expenses, then you'll see them as transactions, obviously like any other bank account, with this sort of negative number here. And then you save the receipts, super easily. All of this functionality exists on the app as well. So you can add receipts via, if they're digital, you can upload them here. You can email them to your unique Thriday receipt email inbox, or you can take a photo of it. And then what we do is we scan those receipts in, right? So you don't have to categorize them. You don't have to assign a chart of accounts. You don't even have to do any of the data entry. So we scan all of these details in. And like I said before, we pull in the ABN and the merchant details to know if they're GST registered, to know whether you should be paying GST or not on that expense, or claiming it if you're GST registered. And that'll automatically link to an existing transaction. So you don't have to think about that. And that this, I think, in my mind, this is the ultimate legal way to minimize your expenses, is to save as many business expense receipts as you possibly can. There's no better way to minimize your tax than this.
Absolutely. And whilst we're talking about deductions and expenses and all of the things like that, I want to talk about different deductions that you can claim, so that if you're not putting it in your Thriday account and it applies to you, then you can consider what you should be putting in. So there's car, transport and travel deductions, and that can be quite a grey area in terms of what's personal use or not. And so that's actually probably a great feature that you might want to show, Justin, in terms of business use percentage.
Sure.
And so
if we go into a transaction and say I paid, this was a Diddy trip for business use, then I want to view all of the details, and you'll see here that automatically it comes out as business use, just given that Thriday is meant to be for your business expenses. But if I decided that I wanted to drop a friend off on the way and they were going to pay for half the trip, but they were going to give me the cash later, I could just say this was 50% business use, right? Um, or, if I went to the servo, bought some fuel, but bought a coffee and some food at the same time, I could say 80% of that receipt or that transaction was for business use.
Yeah, and it's really important to consider that, especially when it comes to what is personal use and what is business use and things around travel and cars and that sort of stuff. Because a lot of sole traders use their personal private car for business use. And so having the opportunity to be able to, and after you've spoken to an accountant, let's say, we can actually work out on average what is the business percentage. You can then put this in the rules there and it will work for you.
Yeah. And we've got a few questions, Laura.
Sure.
How long does Thriday keep receipts for? And what if I left Thriday? I won't. Do I get to keep the receipt somehow? So Thriday keeps the receipts indefinitely, and you can export those receipts or save them whenever you like. So absolutely no problem there. Withdrawals that are not expenses, so personal expenditure. So what you can do there is update the chart of account to owner withdrawal, right? Which is this, and that takes that solves that problem. And this is smart enough that if you update this a couple of times, the system will remember that those kinds of transactions are owner's withdrawals, and it will start to automatically apply that chart of account to those kinds of transactions, right? So there's sort of the machine learning and the AI and everything in the background helping you to eliminate even more financial admin and not having to think about it.
Absolutely. And just to talk about the owner withdrawal for a minute so that you can understand how that actually works. Any sort of owner withdrawal as a sole trader is already tax exempt. It's not something that we need to allocate because we work out what your profit is and that goes on to your personal income. So when you choose these things, you don't have to worry about, oh, do I need to change anything, or is there a place where I make it tax exempt? It's all done for you. You just need to say what it is in the chart of accounts.
Yeah. And, 99 times out of 100, that chart of account, you would never have to change because it sort of understands what the transaction was and it applies it for you automatically, right? Which saves a hell of a lot of time. One more question here while we're on the income and expense topic is I have a question regarding phone bills and other similar utilities not paid from the expense account. So
Yeah, great. Go ahead.
so technically how you would run that is with the business use percentage, right? No, you wouldn't, because you would do it as a manual balance. So you go into tax, you would go into manage balances, and you would add a balance as an expense for the utility. So it could be just other business expenses, right? Or it could be, you could choose a detailed one if you like, but it won't change the actual tax calculation. So you change it to there's utilities, and then you just put the amount that you spent and then attach that document. So there's a record of it, right? And then it's a business expense, proportionate to whatever you might have paid, proportionate to whether it was business or personal, because you just put the actual amount that you spent for the business.
Absolutely. And one of the areas that the ATO are actually looking at is the phone working from home expenses and that sort of thing. And so one thing to note, if you're going to be adding manual balances, is if you're going to be claiming the actual cost of your phone and working from home stuff, you can't then go and claim the 67 cents per hour working from home allowance. It's one or the other. So I would say put it all in Thriday so that it's in the one spot, rather than claiming the work from home allowance. If it's really unclear as to whether your phone or anything that relates to working from home can be claimed, then you can leave it out and you can go for that 67 cents working from home, as long as you can have a timesheet or justify that it's a legitimate thing, because this is an area of focus for the ATO. The other areas to sort of know about when it comes to claiming deductions or expenses is tools and computers and items used for work. And we'll circle back to those because they also fall under the assets and liabilities. But things like clothes and items that you might wear to work, if you have branding on it and it's legitimately what you need to wear. Working from home expenses, we've touched it on, education, training, and seminars. So the key here is if you are going to be claiming education, seminars, and that sort of thing, the ATO will look at this, and it does need to be linked to income that you're bringing in. So for example, if I was a dental nurse and I needed to go and do some training to better my skills, then that could be claimed because I am being paid as a dental nurse. But if I go and just do some personal development, the ATO don't see that as impacting your income. So just something to consider there. The other things are memberships, accreditations, fees, and commissions that relate directly to your work. They can be claimed. Some meals can be claimed, and we do need to be careful there. It is better to have it in there and err on the side of caution when it comes to the meals, as long as they're legitimately because you're traveling away or whatever. Gifts and donations are also deductions, which a lot of people tend to forget. So if you are going to be doing gifts and donations, whether it's this financial year or next, make sure you spend it from your Thriday account so that that can be captured. And then there's also investments, super and insurance, they're deductions as well. And don't forget that the cost of managing your tax affairs is a deduction. So the Thriday subscription is a tax deduction. Working with a tax agent is a tax deduction, and all goes to your taxable income and reducing that. So let me just check I see we've got some questions. Ahmed will come back to depreciating assets because that's the next thing that we're going to talk about. I can see, Justin, you've replied to Dan's question and rookie question. Am I able to claim an invoice for a course that is billed for this year, yet it will be paid early next year? So if it's got GST on it, you can only claim the GST component when you pay it. But for tax, most tax is done on accrual. So if you have that invoice, you can put that in there and it can be claimed this financial year. But if you're going to claim it this financial year, do not claim it in the next financial year. Otherwise, it'll double up. And are gifts to family members, say overseas, included? No. So family member gifts, that is a whole separate thing, and it's your personal decision to do that. When I say gifts or donations, it's in relation to those that are at registered charities or able to claim those sort of things. So yeah, that should answer those questions. And now what I will do whilst we're explaining the next thing is I'll drop a link to the ATO guides per industry, because they actually do a pretty good job as to what you can claim for your industry if you want some light reading. So do that after this webinar. The next part, and I will just go back to sharing my screen so that I've got a bit of a prompt in. Can you see that? Just making sure you can see that.
Yeah, got it.
The next thing that we want to look at is actually assets and liabilities. So this is coming back to one of the questions in the chat. What is an actual asset and what is a liability? So first thing is, and I'll drop this in the chat as well, Thriday has done an amazing blog on the guide to assets and liabilities for small business. So again, some light reading for you separate to this. But assets are really things that you have in your business that impact your finances. So things like cash in bank, physical assets like laptops or property or tools or vehicles, or receivables. So invoices that you've sent out to your clients or customers and are waiting to be paid. They all are considered an asset. It's money that is yours, that is, part of your financial health. Liabilities, on the other hand, are loans or bills that you need to pay. So let's say, again, that rookie question, which I actually love, it's not a rookie question. If you have an invoice that you need to pay, that forms part of your liability. And once it's paid, it's an expense. And things like taxes and GST that are owing to the ATO form part of those liabilities. So, Justin, did you want to share your screen to show us the assets and liabilities register?
Absolutely.
And while that's happening, I'll talk a little bit more about we'll show you as part of the demonstration how you can handle your liabilities and interest deductions. But I also want to talk about depreciation and the instant asset write-off, but I'll do that after we've shown you what it looks like in Thriday.
Yeah. So assets and liabilities in Thriday is super simple. You go to tax, you go to manage assets and liabilities, and add an asset or liability. In this case, we'll add an asset, and let's just say it's a laptop. Let's say it's a good one. And then the business use percentage for that laptop, let's say it's 50% because we use it for work and for play. Is it financed? No, we just bought it outright. Did we purchase it with a trade-in? No, we just bought a new one. Let's say we purchased it at the beginning of the month, and the start date was the same date that we purchased it. Is GST applicable? So this account is registered for GST, so yes, it is. And yes, GST was paid on it, so that's the case. And then original cost inclusive of GST, let's say it was a really good laptop, so we spent $3,000 on it, automatically calculates the GST, and then we add that as an asset. And now you've got that laptop automatically claiming your deductions for depreciation without you having to think about it.
And let's just talk about depreciation for a second, because this is an area that can be quite confusing, but and it ties into the instant asset write-off as well. So at the moment, the instant asset write-off is before Parliament. So they've been talking in the budget about a $20,000 instant asset write-off, which means if you spend something on, whether it's a vehicle, laptop, or anything that is an asset that is $20,000 or less, it can be fully written off as an expense. If you have something that's over that limit, then you can claim up to that $20,000 immediately as the instant asset write-off, and the rest is depreciated. Until this becomes legal and passed in Parliament, it has reverted back to the $1,000 instant asset amount, which means only $1,000 can be, anything $1,000 or less can be instantly written off. We do think that it will be passed and it'll be backdated, and it will be for this financial year, but I just want to at least let you know that this is happening. And then if there isn't an instant asset write-off amount of this high amount, then there is depreciation, which most of the time small businesses have this pooled. And what this means is you buy the asset, it goes into a pool. So whatever you have bought other asset-wise gets added together. And I can see that you've got the car for Yao, which is pooled, which basically says that, let's say you've got $50,000 and then another $10,000. So you've got $60,000 in your pool, and then depreciation is done on that. So if it's a new asset, 15% comes off, and then each year after that, it's 30%. And these percentages change each financial year. And I know it sounds really complicated, but it's done for you in Thriday, whether it's, you want to call it, or it is something that's an instant write-off. So, and that gets done each year, and that percentage that is depreciated becomes an expense, which reduces your taxable income. So that's how you would enter the assets into this assets and liability register. Also in the tax profile, Justin, if you don't mind going there for a second, there is, you can say whether or not, if you scroll down a bit, you want auto depreciation to happen. If you go up slightly, yeah, there. So if you're not sure, you can say no and just manually put it in, as Justin has showed you. If you don't feel that you're all over it, if you make sure you turn the auto depreciation on, we will make sure that if there's an instant asset write-off, that will be dealt with appropriately, or if it needs to be depreciated under simple or small business pooling, that will be done for you. So that's magical, and I love it. Now, from the liabilities perspective, a liability could be that you've bought an asset, but there's a loan attached to it. So do you want to walk us through that?
Yep. So same process, add an asset or a liability, and we'll choose liability. It's a business loan, and we're going to call this loan for office upgrade. And then the starting balance of the loan is, say, let's say we did this a while ago, 75 grand. and the start date was back in December, and the business use percentage is 100% on this one. So add that as a liability, and we're done.
Yep, does it for you. And when you're adding an asset, if we go back to that laptop for a second, Justin.
Oh, the laptop.
Yeah, the laptop for a second. You can change this here, and if you scroll down, you can say that the asset is financed. And so you can say yes, and it will then do what it needs to do as well from a liability perspective. The other thing is let's say you haven't spent it from your Thriday account, through the manage balances area, you can actually add these assets and liabilities as well. So
Liability.
we try and make
this loan. Top loan.
And I will just say with the description, be as descriptive as possible, because if you are going to ever be asked questions by the ATO, you can just say, look at this, and they can understand what you're doing. So yeah, so it's as easy as that when it comes to the assets and liabilities register in Thriday. And the thing to note as well is that any interest on a loan can be claimed as a deduction in your tax. So you have the amount that you pay, and that's normally made up of what you're paying the bank back with, plus an interest component. So that interest component can be can be allocated as an expense as well. So a lot of people don't realize that. So just a little tip there. And then, Justin, I'd love you to, we've obviously showed how easy it is. And the third sort of part of what we were talking about is how does technology actually make this easier when it comes to tax management? And I think from what you've shown us, it speaks volumes. But what are the things that you like to tell people that reduces their stress level, gives them peace of mind, and makes their tax a breeze?
Yeah, so our philosophy is automation with control, right? So rather than take money off you and give it to the ATO because you're expected to pay tax at the end of the year, we would prefer to show you how much tax it is that you owe through these calculations, and then give you the tools to set that money aside, right? And some of those tools are, as your income comes in, your expenses go out, your tax is automatically calculated. So you know how much tax you should have saved at any given point in time, right? And then from your accounts, you can have multiple accounts. So in this particular case, this account has, I think all 10 accounts set up. One of these accounts could be a tax account, and then you could set up another one would be a revenue account, like this one. You set up an allocation to automatically send 15%, which is a good rule of thumb, to your tax account. And let's just say in this case, it was tax 15%. And we want to do it immediately every time income comes into this account. And the purpose is for tax. And then we go confirm. And that's it. Every time money comes into your account now, 15% is saved in a separate account for tax. And all you need to think about is once a month or so, just come in, make sure the amount of money in that tax account is pretty close to the actual amount estimated for tax. If there's more tax owing, you can transfer a little bit more into that tax account. If there's less tax owing, you can take a little bit of money out of that tax account. But basically automation with full control. And let me give you an example of where that matters, right? We've got a customer who we did a great call with not that long ago, who's a milliner, right? She makes hats. All of her revenue comes in spring, but before spring, she's received a lot of deposits for the hats that she's going to sell, and she needs to buy the materials for those hats. She knows that come the end of spring, she's going to have enough money to pay her tax bill, but she also knows that pre-spring, she's going to need some of the money that would be in that tax pool to buy the stuff that she needs to make the hats to be able to get the final payment on those hats, right? So in her case, if we were just to take out the, say 40% of tax and give that straight to the ATO, she wouldn't have enough money to do what she needed to do. So she has full control of her finances and knows exactly how to use them. And she doesn't have any bill shock at the end. She knows how much money she's going to get and she knows how much tax she needs to pay. So automation with control, that's the key.
Absolutely. And it's the empowerment of knowing at any time how much tax you owe, and then that, having the percentage set aside or even manually sending yourself the money so that in the tax account so that it's sitting there will mean that you never have to worry. And to answer your question, Mohammed, I see that you've asked, how about major fluctuating incomes from month to month? Can one leave paying tax until the end of the year? So the first thing is you don't have to pay anything until it falls due. So once your tax return is done, if you're in a payable position, that is when you would need to pay your tax. What may happen, and I think this is something that we need to sort of be clear about, is that if you are in a payable position, the ATO goes, oh, this is what we're expecting you to earn next year. And then they put PAYGI installment. So that's a pay-as-you-go income installment amount each quarter that you may need to pay. And effectively what that is they've calculated based on what your last tax return payable amount was, divide that by 4 quarters and a little increase because they expect you to earn more money. This is what you'll have to pay each quarter. And that's not something that you can opt out of. And it's important for you to know that. But if you can vary things down with a tax agent and then pay in the last quarter. The thing here with doing that is that it can mean that you get a surprise bill or you don't have enough money that's in that account. So using what Justin just showed in relation to allocating the amount to a tax account will mean that no matter what happens, you have the money in your bank account. So yes, you can leave it until the end of the financial year unless the ATO puts you into this system of theirs. And you would know if you're in it because you'd get a letter that states, you've got this amount payable for this quarter. And that's, you can again talk to myself or a tax agent and ask questions around that if you have questions specifically, which actually leads me to, do you want to be ready to make tax time relax time? And that's our key sort of effort here, is to make your life easier. I have opened up my calendar for free 15-minute calls. So if you have any questions that are specific to your situation that hasn't been answered on this webinar, please just book into my calendar. Very happy to spend that time with you and answer those questions. And if you are wanting to switch to Thriday because you're not already here and you've seen how easy that is, we also have a switching service, which starts with jumping on a call with me to understand what you need to do and make that switch easy. So feel free to jump on that. The last thing that I wanted to let you know about is that as I have joined as the head of tax and accounting, we now have the opportunity as a tax agent to help you with your BAS and tax lodgements. And that will be live very soon. There is the automated function where if you feel really super comfortable with your own information that's in there that is accurate, you can auto lodge that with the ATO. And that's pretty much hands off and you're in full control of that. Or the assisted option where you get to talk to me and the tax team around, what's happening in your business, if things are accurate, get some feedback and also get those lodgements done. So we will be sending out further information about that soon, but I'm super excited to actually be able to work and extend that Thriday automation and help when it comes to that. Yes, it is. The tax return is coming this year. So once the financial year ends, we will be able to lodge your tax return from the end of July. And I'll tell you why at the end of July, because there are pre-fills that the ATO needs to wait for. So that is, if you have salary and wages, they have until the 14th of July, your employer, to submit this information to the ATO. Interest from banks, private health insurance, any sort of crypto or shares, that all gets reported to the ATO and forms part of your tax return. And if you don't wait for that, you can either be inaccurate or I'm going to ask you a million questions. And who wants a million questions? So the pre-fills actually allow me to make your life easier and lodge that tax return as well. So we'll keep you posted about that. I'm very, very excited. Awesome. That's everything from my end. Justin, did you have anything that you wanted to say, or are there other questions? If so, chuck them in the chat.
Yeah, any questions? Happy to answer anything.
Awesome. So yes, tax returns coming this year. So exciting. The accountant's excited. Can you
Excited about
tell?
tax, said no one ever except Laura.
But you will be. You will be
Oh,
when
I
you
am.
switch to
Yeah.
Thriday and use Thriday and all of that.
If it makes my
Awesome.
life easier, I'm happy.
Oh, totally. Awesome. Well, it looks like there's no more questions in the chat. So again, as always, feel free to reach out. There is a direct email as well, accounting@thriday.com.au. There you go. Chucked it in the chat. You can send your questions there if you're a Thriday customer. Really happy to help. And yeah, Alice is always at your disposal too. She's amazing help. And thank you, Justin and Alice, for joining me.
Thank you, Laura. And if there's anything else you want to learn about regarding finance or anything like that, just let us know. We are going to be doing a lot more webinars, so happy to help in any way we can.
Amazing. Thanks, everyone. Have a brilliant day and enjoy the tax period that's to come.
Good on you guys.
Awesome.
Bye.